Our market monitor tonight says investors are too worried about the things everybody's worried about, but not worried enough about the world's less talked about risks. She's Susan Fulton, president of FBB Capital Partners. Susan, welcome. Good to have you with us. I was intrigued by that idea that we spend too much time worrying about what everybody's worrying about and not enough time worrying about the things we really ought to be worrying about. Give me some examples of the former and the latter. Well,
we're worried about inflation, and I don't think we ought to be. We're not worried about deflation. I think there are several things that could put us in trouble that way. One is gasoline prices. I see them continuing to move up, and that is going to be
That's the opposite of deflation.
No, because what happens is gasoline is a tax on our consumption level, and it's like food and housing. If you have to spend more on it, you have less money for anything else. So it's not a discretionary item. It's an item that you have to do to get to work. And at least historically, if you look backward, when gasoline prices have gone up, we have had major economic problems in the stock market. And I would use as an example 2008. The first sign that our firm saw that the world was going to be in trouble was when gas prices got to $145 a barrel. Mm-hmm. And we sold half our gas. Mm-hmm. Because what it was going to do is contract the market, which is exactly what it did. Mm-hmm. The second thing is the Europeans are now charging, or actually have a negative interest rate. And they're hoping that's going to get their banks to lend more to their population. But since everybody is lazy and bankers are lazier than the average, what it's actually going to do is have their bankers buying treasuries, which will keep treasury yields way down.
It's a fascinating conversation, but let's move from the really big picture down to individual portfolios. You have a couple of stocks that you are recommending tonight, and let's go down your list. Bank of America is at the top of the list. Not a very popular stock recently with investors. What do you find attractive here at $15.42?
Well, it's a Warren Buffett stock. It's a stock nobody likes, and all of its problems we believe have already happened. So it is going to have to talk the federal government into letting it pay a dividend again. But it has very, very strong cash flow, lots and lots of exposure to the checking savings account market, which is the cheapest money a bank can get. And we think that they'll be able to start paying a dividend this year sometime.
All right, let's move on to another choice of yours, and that would be Caterpillar, CAT.
CAT, yeah. CAT was a dog last year. It's begun moving up this year. It's had a little bit of a pullback. We think it's undervalued right now. We think that it may have run a little bit ahead of itself, but we think that it has lots of get up and go, and it's a global growth market.
Mm-hmm, mm-hmm. Let's talk about Mondelez, ticker symbol MDLZ. You have a $42 price target on this stock. How do you get there? What drives it?
Well, the two things that we think are going to drive Mondelez up is, number one, the developing market. It's the old Kraft overseas.
Right.
So it's a developing market play. It's the kind of thing people buy when they first begin to get money. And the second thing is it's got an activist investor in who's bought a substantial part of it, who's looking at cutting costs and increasing shareholder value. So it's got some pressure on its back.
All right, Susan, thank you very much for being with us tonight. Do you have any disclosures about those three stocks you mentioned?
No, I own none of them.
Okay, Susan Fulton is president of FBB Capital Partners. Thanks again.